Alrighty, next on our list is M313. M313 gives us a series of transactions for quick cleaners and asks us to prepare the accrual basis journal entries for each one of them and also a preliminary net income. I've written out some of the journal entries for us below to kind of save some time, but we'll go over the first three together. The first one is A, we issued 25,000 of QCI stock for cash. So issuing stock for cash, we debit cash because we received cash. How much did it say again? It told us we have $25,000 in cash. So $25,000 in cash. And then we'll credit contributed capital, which I'm abbreviating CC. And remember, in chapter 11, we'll begin to talk about how contributed capital can break down between common stock, additional paid-in capital, preferred stock, etc., etc. So that's first transaction. Next one, it tells us we incurred $600 of utility costs for the month and we'll pay them next month. In this instance, we debit utilities expense because we incurred an expense and we're going to pay them next month, so we'll credit accounts payable. I believe it said we did 600, so we'll do 0.6 here. Okay? All right, next it tells us we paid wages for the current month totaling $2,000, so we will debit wage expense because we paid wages totaling $2,000 and incurred a wage expense, meaning that we had employees work. That's how the service was provided, and that's how we actually incurred the expense. And that's what drives the journal entry here. But since we paid them, we'll also credit cash instead of wages payable here, $2,000. Okay, I've written out the rest here for us. Real quickly, it says we perform cleaning services on account. There's that word on account, so we know it's accounts receivable, not cash. We're receiving something instead of paying something, and we'll credit service revenue because it was a revenue that we actually performed, or a service that we actually performed. On E, it says some of Quick Cleaner's equipment was repaired at a total cost of $150. The company paid the amount immediately in full. So we debited repair and maintenance expense here, 0.15, and then credited cash for the same amount. And that should be all of the transactions that we have. If we go over here for the preliminary net income, remember, in a single step model for the income statement, because you'll learn the difference between a multi-step versus a single step, but in a single step model, we have revenue minus expenses equals net income. The revenue here, if we scan through here and just look at what revenue it is that we have, we know it's the 2.8. So we got 2.8 listed out here. Then we scan over here and look for the expenses. Notice expenses, they increase with a debit. Expenses increase with a debit. Therefore, whenever I'm looking to see what expenses we have, I can just focus on all the debits over here. I don't even need to check the credits. And for the revenue here, revenues increase with a credit. So if I was looking for revenue, I'd look for all the credits. I'd scan the credit side. So looking for expenses here, we find we have wage expense at $2,000, so we have that listed out here. We have utilities expense at $600, have that listed out here. And then we have repair and maintenance expense, have that listed out at $150. That leaves us with $50 in preliminary net income. Please send me any questions that you have.